Okay, peeps, welcome back. So today we're going to be talking about our dividend trading and investing strategies. This will be the complete guide. Let's get it. So the first thing we want to bring up is that this is just going to be for dividend investing. Okay, this is not going to be for swing trading. This is not going to be for crypto. It's not going to be for day trading. It's just for dividends. That's it. All right. So strategy number one. We buy at random prices and then we DCA down. In what instance do we typically do this? Well, usually we either do this when markets are at all-time highs, which they currently are not, or what we will do is we'll do this on pretty rare occasions when we intend to basically diversify or revert back to equal weight. What we mean by that, as you guys can see on the portfolio here, a lot of these positions are pretty equal weight. We're obviously very heavy in TSLY. There's a reason for that. It's not just about the passive income, but as you guys can see, a lot of these positions are weighted between 3 to 5%. We like to try to keep them as even as possible on both the percentage and the dollar amount. So pretty much what we would be doing is we're buying into these positions at random prices. We don't really care what the price is. Okay, we just want to get to X number of shares. Like we want to get to 100 shares, 50 shares, whatever the case may be. So I'll click on a few examples here. So basically, anything that's $10 or under, our minimum is to get to 100 shares. As you guys can see, we're actually slightly overweight on this. And another good example of one would be this one. We're actually a little bit underweight on this. Again, this is about $10, but we have a little bit less than 100 shares. Reason being, we took profit on the way up and moved some of that profit and initial capital into other undervalued positions. So there's that. So basically, as you guys can see on the portfolio here, we have some positions that are not at the levels we want them to be at. Recently, we got paid TSLY dividends. Basically, what we did is we took the TSLY dividends and we moved them into NVIDIA, OARC, and Aptly. Since they're now available on M1 Finance, we want to get each one of these to at least 10 shares. And then what we intend to do from that point is basically just rotate capital in between the yield max funds into these other positions, and then from these other positions into yield max. So that way, eventually, we'll get to the desired share count on each of these positions. And in this particular case, we don't really care what price we're buying at. We're basically just looking to get the share count to what we want it to be. Now, if we end up taking profit along the way, I'll try to give you guys a live example here if I can find one. USOI is in the money right now, okay? So we're only up about $2.50, so it's not really a lot. We probably won't take profit on this, but if we had like a $500 position here and we were up, say, like $10 to $15, what we would do is we would click the sell button, we would sell, we would take all of the profit out, and then we would take 5% minimum off the top, and then we would put that money into a position that's undervalued. Like a good example, try to see if we can find one. We'll take EFC as an example. We've made quite a bit of money on this. So we would basically take the money that was in the money plus 5 to 10% of the capital off the top, and we would move it into this. As a result, reducing our cost basis and also increasing our passive income and future profit potential. So strategy number one is kind of a mix between strategy number one and strategy number two, but in strategy number one's case, we're not really caring about whether we're buying at the highs or the lows. That's not so much of a concern for us. We're more concerned about getting our share count to equal weight across all of our portfolios and all of our positions. But again, if we're in the money, we'll sell, move some of that profit and or cost basis into out of the money positions to increase our net worth, passive income, and profit potential. So strategy number two would be to take profit on the way up and then basically take the profit, as we said before, plus 5 to 10% off of the cost basis and put it into undervalued positions. And then we just rinse and repeat. And we try to do this in conjunction with the ex-dividend dates. So if we're taking profit off of one position, what we mean by this is we will take profit so long as the ex-dividend date is far out enough to where we're not going to miss it. So if the ex-dividend date's a day away, we're not going to take profit even if we're in the money. But if it's like a week or two away, then we'll take profit and we'll move that money into a position that has an ex-dividend date that's coming up and or is undervalued. We don't always get this right. It's not always perfect. We take the opportunities when we can get it. If we get it before the ex-dividend date, great. If we don't get it, then we just move the money to a position that is out of the money, regardless of what the ex date is. So this is strategy number 2. We rinse and repeat it over and over and over again to maximize profit potential, increase income, and also to buy into and accumulate shares in other positions. Again, a great one that's an example that we've done this on was USOI. As you guys know, oil has been skyrocketing to the moon. That's the reason why CPI came in a little bit hotter last month. And it's currently in the money now. We've been taking profit on the way up, which is why you guys see our market gain of $20. Again, it's not huge, but every little bit adds up, right? If you're a new investor and you don't have a lot of money, this is basically a really great way, as long as you can perfect your strategy on doing this, it's a great way to accumulate more wealth and more capital to be able to work with in your investment accounts. Another good example would be TWO. This is also a position we own. We have not bought or sold in this in a long time, but as you guys can see, we are actually, well, looks like we might actually be taking profit today because the position is at a gain. So we definitely want to take money off the table. As you guys can see, we've taken profit before. We've also received dividends. We're at 53% on this position. We would take money out of here and move it into something else, like maybe like this one. So RA is a position we want to get to at least 50 shares. So we would take the money out, buy in here, reduce our cost basis, increase the share count, because again, we're buying more shares with the same amount of money at a cheaper price, and then just rinse and repeat. That's how we were able to get some of these positions up much higher, like HRZN, for example. We did this with HRZN. Again, you can see it's out of the money, so we can buy much cheaper with the same amount, increase our share count. We've taken over $100 in profit on this position. We're up 45%. And another one, again, is the EFC. We've done this with the EFC as well. You can see we're up a lot on this position, 44%. Another good position we just recently did this on was GSBD. This is another one. So it looks like we are in the money again on this one. So it looks like we're going to be doing the same thing with this one. So we'll take the profit out plus 5% off the top, and then we'll reinvest the other 95% back into this position, and then take the profit plus the 5% and move it into something else that is out of the money. So that's strategy number 2. Strategy number 3 is buy and reinvest into upcoming ex-dividend dates. So what exactly do we mean by this? Well, basically, what you would want to do is you'd want to go through your portfolio of basically everything that you're going to get paid for the month. You want to see when the ex-dividend date is for the month for every single position. Write it down on a piece of paper, okay? Not financial advice. This is what we do, but basically we would write it down on a piece of paper. If this was a strategy we were going to use, we would write down every X date from the 1st to the 30th of this month. And we would basically plan to invest our active income and or passive income or profits we make into every successive dividend payment throughout the month. So we'll take a look at a few just to give you guys some examples. So this is not a rotation of capital method. This is basically just investing in each upcoming ex-dividend date. So in this case, basically, so you see the X date here on CLM. What we would have been looking to do was basically buy between the 1st to the 13th of this particular fund. Again, if there's any X dates that came before this, we'd put the money in those first. And then, like, let's say the previous X date stopped on the 9th. So we would basically start buying in from the 9th to the 13th on CLM. And then if your next ex-dividend date after that on your next position was on the 20th, then from the 14th to the 19th, we would buy into that following position. So you got CLM. We'll take a look at SFAL. Hopefully they updated that on here. Okay, they have not. That's fine. See if maybe TSLY did it. Nope, not updated here either. So we'll take a look at a couple others. We'll take a look at maybe PDI, OPP, and BSTZ. Okay, so PDI is not updated either, but we can basically assume on previous history that the X date would have been around the 9th. Since it's past the 9th now, pretty much we would be looking to buy from now until roughly about the 8th of October in advance of the X date. Okay, so that way, basically the idea here is the more you buy into your following X date, the larger the dividend payment is going to be out every single time you get paid. And it just keeps growing and growing and growing literally every time you get paid in every single position. So that would be another example. Still, we'll take a look at OPP. It's basically a closed-end fund. So the X date would have been on the 14th. Again, we probably could have done like a mix of CLM and OPP with this one. Basically buy from the 1st to the 13th or whatever, basically past the previous X date of any prior positions you had up until that date. And then on the payment date, you'd get paid a lot more. And in between the 14th and the 29th, you could be investing in other positions up to the X date. And BSTZ, looking at the history, basically it would probably be about the same. So you might have to do a mix between these. Again, it's not going to be an exact science, but the idea here is to write everything down from the first day of the month to the last day of the month, take note of the X dates, and basically invest into those positions in advance of the X date. So the fourth strategy here is basically to pick two funds and rotate the capital. So we're going to take a look at our prime example here. So we got, see if I can find it. I really got a lot of tabs here. So you got the Yield Max funds, and we have the Crane Shares KLIP ETF. This is a prime example of rotation of capital. Okay, and you can do this with any two positions. It does not matter. The idea is to invest the capital from the payment date of one position into the X date of the other position and rinse and repeat. So that way you get paid twice a month, you grow your capital twice a month, you're reinvesting your dividends twice a month, and the compounding effect is twice as strong as if you just reinvested the funds back into the same fund only once a month. So we go to distributions here on KLIP. You guys can see that the next X date is on the 27th of this month. So if we look at the calendar, that's roughly about a week away. So we have about another week to buy into KLIP before the payment date. Fortunately, the payment date comes pretty quick. It's not really a long time in between the X and the payment dates like it is with the Yield Max funds. So we'll go over here to TSLY, since TSLY is everybody's favorite. As you guys can see, the net asset value is a whopping just over $500 million. That's kind of insane. But as you guys can see here, the spread between the X date and the payment date is almost 10 days. So it's pretty large. KLIP is actually much smaller. You only get I think it's like a couple of days in between the X date and the payment dates. So basically, pretty much what we would be looking to do here is, so you invest from the payment date of the 14th on Yield Max. Okay, so you get paid on the 14th or the 15th from Yield Max. You would then reinvest the money into KLIP before August 29th. Okay, you can either DCA the money in, or you can put it in all at once. We like to bulk buy. We just put it in all at once, especially if the markets are at a discount. There's no guarantee the markets are going to go lower. during that 2 week period, they could go higher, and then you're buying more for less instead of buying less for more. So you get into KLIP, and then a couple days later, after the X date, you get paid from KLIP on the 31st of August. You'd basically go back, either DCA in or buy into YieldMax, whatever your preferred YieldMax funds are, before the X date, and then you'd get paid more money on the payment date. You get paid on the 18th or the 19th, and then you basically just go back and buy more KLIP, and then get paid again, and continuously rinse and repeat over and over and over. If you click on the little click here button on the YieldMax site, you can basically see that they pretty much give you all of the X dates and also the payment dates for the entire year. So you can plan this rotation of capital out well ahead of time. It's not like you have to guess. Okay. They literally tell you exactly pretty much when to get in and when to get out. So again, you can do this with any 2 positions or more than 2 positions if you prefer, depending on how much capital you have. You can do multiple different positions, like you can do 4 sets of 2 where you have 2 rotating, let's say TSLY and YieldMax, and then you have 2 of something else, 2 of something else, 2 of something else. You get the point. So anyways, this is our 4 strategies on how we maximize returns and income on dividend investing. Hope you all enjoyed this content. Please like, comment, and subscribe, and we will see y'all later. Peace.